All right, what is good? I hope everybody is doing well right now. It is August 8th. We're wrapping up for the end of the day. And I kind of want to hop on here and do another kind of little market review in regards to the CSS validation that I've been talking about quite a lot. In my opinion, one of the most powerful things for scalping, and it's always a great thing to see. But in this video, I'm going to go ahead and go over the 2 minute and the 10 second, just kind of like a precursor. I have been liking the 2 minute a little bit better than the one, only primarily because we are in a little bit higher volatile conditions, and I have found that the 2 minute is going to be a little bit cleaner in regards to what your anchor point should be, where you should be engaging with the price, where you should be drawing them on the lower time frame, and it just provides a little bit extra confirmation and a little extra confluence in regards to these lower time frame validated areas, because it can get a little hectic on the 10-second chart if you are not used to it. And I'm trying to make this as simple as possible for the people wanting to engage in these kind of setups. So we'll go ahead and hop into it. We'll go ahead and go into the first trade over here. And I'm going to kind of touch on a couple things that I like to see specifically with these. I'm going to talk about QS because I know some people had questions about QS in regards to what the heck it is, because I don't think I've ever publicly talked about it. It's kind of been like a private thing. And I'll talk about it because, I mean, it's in this setup. And it's nothing special, honestly. It's just a validation that I like to use. And before I talk about this, we'll just go ahead and talk about QS. So QS simply is just an immediate body closure validating a CSS, right? To me, it's one of the strongest signatures to see, and there's one reason behind that is because I understand and can see visually that there is willingness and price to move in X area, right? I understand that with that impulsive close up above, that there's going to be a high likely chance that the market is going to want to revert back to it and going to want to expand off of it. So that's simply QS, right? This right here is a beautiful representation. You can see we have the CSS validated in sequence with the swing low. We get this body closure up above, strong body closure, right? This is going to be just a QS, and an opposing one would just be an immediate body closure to the downside above a green bar. So it's a really simple concept, and it's just something I like to see in regards to these kind of validated setups. So that's just kind of something to keep in mind, right? So this first setup right here it's quite beautiful, honestly. You can see we get this nice displacement right up above the swing high over here. We have our QS validation right down here, which is just a normal CSS. Again, it's just a quick closure up above showing willingness and price. So this first setup right here, like I said, beautiful, beautiful setup. You can see, again, we close up above this high. More importantly, right, we get some form of consolidation resting right up here. So we are going to understand where true manipulation will be, right? We see price reverts back to the 50%. We get a nice fail to tap this, or we get a failure to mitigate it right there, kind of revert back up, kind of come back off this imbalance, and we put it in a new low, which is going to mitigate this area. So you can see right here, this beautifully delivered. And for the people kind of wanting to stretch their R a little bit, I'm going to talk about it in this video because it is possible. It's kind of a normal thing, because more times than not, these validation areas are going to reside in an area where we have broken over a swing high, swing low, just in general, right? And what we can understand about this, right, if we come and revert back to here, just depending how you're wanting to trade, right? If you're wanting to stretch R, what you could either be doing is taking it up to zone high right up here on our validated area, or you can be stretching it up to this high that we closed above right over here. There's going to be a high likely area to kind of stretch your R to if you're wanting to, and that it fits in your risk management plan and just overall. But simply, I wouldn't try playing off of anything too tight here. I would still be personally keeping my stop down here below the low. And I would just be boosting my R to about a 1.2 coming up to zone high right there. Or you could just simply be taking the quick one-to-ones, which deliver beautifully and are very, very precise with these validations, right? So that's that first setup there. Again, kind of talked about QS right there in regards to what it is. Nothing too special. It's just about how quick a candle closes above. Described candle pretty much, right? And you can see right here, we get the same exact sequence that we did in this setup right over here. We get a nice body closure up here. We get our validated CSS, which is in a QS formation. And we see price, once it closes up above here, we start to get some really, really nice consolidation right here, right? We come down, We attempt to mitigate this area a couple times, our validated area, which is perfectly aligned. And I kind of want to pause here for a moment and kind of talk about this because this is a little bit, I wouldn't say too important, but it's something I like to see specifically with these setups is usually, right, when we run into a situation when it is perfectly aligned off the 2, the 10, the 1 and the 10, 3 and the 30, 6 and the 1, 12 and the 2, whatever time frame you're using, right? Usually when we see a perfect alignment, right, with the lower time frame up to where the higher time frame, our validation area CSS is residing, that's going to be one of the strongest signatures that I like to see. It's going to be, I mean, because you really don't have to even think about it, right? It's validated on your validation time frame. You have your valid area in your lower time frame, and it's going to be a high likely area to want to engage in with price, right? But back to the setup specifically, right? You can see we get a nice consolidation right here, right? We get some manipulation down here, and we get a really, really strong expansion once we finally tap this 50% right here. We just get an explosive move up right up to zone high, which is always a great thing to see. And some of the best setups, that's what I've noticed too, especially with these validations, is usually they're going to provide the lowest drawdown possible in regards to kind of playing lower time frame swings and stuff like that, right? So getting into this next setup, I can go ahead and delete this one because this one was never reached right over here. And I kind of want to talk about this too. And actually, this is a good moment to kind of talk about this too. Something I personally don't like trading. The hit rate on them is not too great, even though they worked out pretty well today, which is good to see. I mean, nothing too crazy. But when we run into an instance where we kind of have a fail to close down below, on the opposing side, I'm not really wanting to engage with this setup. Like, for example, you can see here, we come down, we take this low right over here, we get a fail to close, we return back into the range. Not a huge fan of these. The hit rate on them is not great, and these are ones I usually seek to avoid beyond anything. So I kind of wanted to preface that and kind of give an explanation behind that and what I usually particularly look for to not engage. It's not much. I'm just looking for two things. Am I with the market, right? Am I with the move? And is there a opposing fail to close against me, right? Those are mainly the two things I'm going to be seeking beyond anything, right? So we can go ahead and delete that right over there. And I kind of want to, okay. All right, so we have two setups here. We get this first one up here. This one gets repriced faster, so we're going to talk about this one first. Ooh, this is a good one. This is a good representation of my A++ setup. Basically, right, if on a pen on paper, an A++ setup for me would be validation time frame failed to close with a 1 or the 2. I kind of bounce back, and I'm looking at both. The 1 or 2 minute failed to close, and I'm looking for a relatively quick confirm CSS, and that's it. I'm telling you, that maybe with some consolidation on it is going to be my A+ setup. The hit rate on them is absolutely ridiculous, and that's up to you to go back and look at them if you want. But if I had to tell you what my A++ setup would be, it would be a fail to close on my validation time frame with maybe some consolidation right down here, and we come up and tag the 50% of our validated area. That's usually going to be my favorite spot to kind of pinpoint because there's two reasons, right? The hit rate's great, and the drawdown on them is very, very, very minimal, right? And I kind of want to bump down to the 1, so I'm not confusing people on this specifically. If we go over here on the 1 minute and we zoom in right up here, this is what I'm talking about. It's failed to close because I know some people have had questions on them, and I've kind of talked about them in a lot of reviews, but still I'll cover them for the people who may be struggling with it a little bit. But right here, you can see we have this swing high right over here. We have a low, and we have a prominent high right over here. This is going to be identified as our swing high, right? We come up above it, right? We wick it, we close back within the range on our validation time frame, right? The 1 or the 2, whatever you're comfortable with. And this is, like I said, going to be one of my favorite signatures to see. Again, these usually have the lowest amount of drawdown possible and always are going to be my favorite setup beyond anything. You can see how beautifully this delivers. We come up, we get a micro accumulation. We get a bigger accumulation down here, kind of rotate back up, and we get a kind of a smaller micro accumulation right here before we come up and manipulate up to the unmitigated area. And this is kind of a good pinpoint to talk about this too, is usually what I like to see resting at about the 50% is going to be some form of an SNDR for that respected area, right? That's going to be one of my favorite signatures to see when that specific area is lined up near vicinity with the 50%, right? So now kind of touching on this setup a little bit, and this is kind of a good example of boosting your R a little bit more if you want to, right? If we look at this, let me draw this over so it's kind of out of the way, right? So we've identified on the 2 minute, right? Where is our high likely area, right? We see our CSS resting right down here. You can see on the 2 minute. Actually, let me go back up to the 2. I was still on the 1. Let me go down here. You can see we have a beautiful 2 minute CSS resting right down here. We get a nice displacement up above, right? We get a quick confirmation of that specific area. So this is going to be a high likely area, especially when we have broken over a swing high. That is going to be one of my favorite signatures to see. So when price and if price reverts back to this area, I would be seeking to engage with price just based on this exact sequence right here, right? And in terms of boosting R, it's quite simple when you run into a scenario like this where you can understand that you are in a larger area. Those are going to be the times where you can boost your R quite a bit, and you can kind of take it up to where that zone high would be, right? So from this perspective, what you could simply do, right? And I kind of want to talk about this too, because this is a good example, because I don't want people to get caught in this, because me personally, this is kind of getting a little bit too late for me to want to engage in. However, there's two things here. When this specific sequence happens, where price is traded away for quite a bit of time, right? And we're starting to slowly creep back to it. Maybe we get some strong impulsive move back to that specific area. I will be removing my limit and I will be waiting for some form of consolidation phase to occur, right? Because I love seeing me some accumulation right before manipulating down to an unmitigated area, especially on these validation timeframes, right? So in that instance, I kind of want to talk about that too, is usually when we kind of start to trade away for some time, I will seek to look for some form of accumulation to occur within that specific area before I even think about putting a limit on, especially kind of with how I play these. I play a blind limit at the 50%. I don't wait for any extra confirmation beyond that because, with these, you don't really need to, in my personal opinion. And that's up to what you're comfortable with, et cetera, right? But in terms of boosting R, right? We see this, we identify this validated area on our lower time frame chart, aka the move origin of this bigger area, right? We see price revert back to the 50%. We get a nice tap, right? Where are we expecting price to go? You could either do one of two things. You could go for the quick 1-to-1, which delivers in about 30 seconds for how many points would this have been? It would have been 16.5 points for 40 seconds. Can't complain about that. That's quite a bit of moolah. But if you're really wanting to stretch your R, right? What you can be doing, and you'll run into these situations quite frequently, right? You can see, right? You can stretch it up to where? You can stretch it up to zone high, which now gives you, for this specific trade, a 2.89 R and 47.75 points. So that's something you kind of can't complain about for the people that aren't a fan of taking one-to-ones, which one-to-ones pay the bills. So I don't know why anyone would ever kind of caveat against them, but I know some people like to, just feel a little bit better about themselves snagging a bigger R multiple, which is completely fine. And that's just up to what works with your mind better and how overall you execute. But in this specific situation, this is how I would go about it completely in regards to, because I know some people will have questions like, how can you boost R with this? That is exactly how, right? So now we have this setup right over here. I kind of want to talk about this because this is pretty clean. Right over here, you can see we do get, this would be a 2-minute fail to close zone. So this would be one of my favorite setups to seek to engage in. Price did trade away for some time. And this is kind of a good example of why I'm not a huge fan of this, especially if we don't really get a consolidation phase, right? If we look at this from this perspective, right, we get a bigger consolidation phase and we get some really strong momentum and strong expansion down to this 50%. This is when I would have my limit off of this and be weary about engaging with the blind limit at the 50%, right? Because we did not get that close consolidation phase to that respected area where I'm wanting to take an entry from, right? Ultimately, regardless, this one would have been a break even for me just based on where it went up to, right? We're creeping into this S&D towards the top of the zone. I would begin starting to shift to break even there for me personally. But this is kind of a good representation of why I favor those accumulations so much. Because look at this from this perspective, right? Where does that accumulation occur, right? We get this accumulation. What are we coming down to now manipulate after we have already mitigated this area? The last saving grace of this entire price leg up. What are we going to manipulate now? We're going to manipulate this low now, which is going to lead towards that expansion. This was the move we were wanting to see. This was a consolidation we were wanting to see right above this zone. This was the manipulation we were wanting to see to gravitate towards that 50%. Does that make sense? So that's just kind of something to note about those specifically, right? So now kind of creeping over to this next setup, this is kind of a good representation of kind of the validation being so prominent inside of a consolidated market. But what we see here, right? And I kind of want to touch on this. This personally, I would not really want to engage in this just based on kind of how this price is right here, this price movement. Not a big fan of it. I usually favor expanding markets more so than purely tight consolidating markets. But for the people that maybe struggle with range trading, I think this validation would benefit you greatly because it really provides a lot of clarity in price, right? You can see throughout this entire price move, where's our validated area going to be, right? The way I validate CSS, right, has to be in part with the swing low, right? We can see this down bar puts in the swing low. We eventually get a body closure up above it, right? This candle right here at 1246 validates this area. So now this is going to be the high likely area for me to want to engage in. What do we see price do? We see price start to get some consolidation right here, right above the zone. This is in clear vicinity and near vicinity for this 50%. We come down and we manipulate this. And ultimately, what does this do? It delivers us our nice one-to-one leading up to a new high. So you can't complain about that in terms of kind of clearing up, consolidating, especially tight consolidated markets, right? So now if we go right over to this one right over here, this is another great representation of boosting your R. You can see, right, ultimately, right, we're in a bigger area, right? We valid low, valid high, close below, close above, right? Decent displacement out of the zone, not too big of a worry, right? But ultimately, right, we get a one-sided distribution. We've identified our pre-specific area, and this is kind of a good moment to touch on this too, in regards to refinements, right? And this is, I think, in my opinion, me personally, one of the most important thing as traders is being able to mitigate risk and being able to mitigate overall exposure to the market, right? I am always seeking an opportunity to be able to de-risk myself, be able to tighten my entry a little bit, be able to reduce my risk, right? Be able to get a little bit more precise with my entries, right? And it's kind of a good moment to talk about because I know true anchor, right? It should be realistically down here, right? But when we look at our validated area on our validation time frame, where's the CSS residing, right? Residing right up here. Do we have a low resting right there? Yes, right? This is going to be the nearest vicinity one to be able to anchor off of. What have we now done? We have now mitigated ourselves from drawdown. We've mitigated our total risk exposure to the market, just depending on what size contracts you're trading. If you're trading constant size, if you're trading just strict contracts, right, it's going to be different, right? But in retrospect, right, what are we doing? We are mitigating ourselves from overall risk, right? We're getting a more refined entry, right? We can identify an SNDR of this area resting at the 50%, right? That layered confluence kind of we were talking about earlier. And ultimately, right, this gives us that delivery that we are wanting to see. And in terms of boosting our R, where can we take it down to? This low down here that we closed below, right? What do we see the market do? Consolidate up here, displace down. Where does it go? That zone low down there. So that's just another great example in terms of reducing risk. I think kind of something important you should be looking at with these setups is if we fail to put in a new high, right, and we're reverting back to a CSS, be a little bit weary, vice versa for the opposing side. And if you have a fail to close kind of against you, I'd be weary about potentially taking those setups. Not my favorite signature to see, right? So now if we go over to, actually, I believe that was the last setup for the day. Yeah, that was the last setup for the day. As we're creeping into close, I usually don't like executing that last 30 minutes. Price can get a little bit funky, just as I don't like executing the first 30 minutes of the market open. But I believe that is going to do it for this video. I feel like this should help kind of clear some things, in particular what I'm looking for specifically with these kind of setups, just in terms of the sequence of them, right? Where am I looking for these? And I really hope this video helps. And as normal, if you have any questions, feel free to shoot me a tweet on Twitter, comment down below, whatever works, and I will try to respond to it as fast as possible. So I hope this video helps, and y'all have a blessed night, and I will talk to you all soon. Peace.